afternoon and welcome to BizTech's Asian Midday Market Watch. It's Friday, the 15th of December, and we have Kelvin Wong, Senior Market Analyst from Oanda, as our guest today. Kelvin, it's always great to have you on the show.
My pleasure, Brian, and happy Friday.
Now, Kelvin, before we get your insights, let's take a look and see how markets across the region have performed. We're going to start over with the KLCI. It's a sea of green. The KLCI over in Malaysia is up 0.33%. Shanghai is up 0.2%. The ASX All Ordinaries is up 0.89%. The Nikkei is up 0.86%. The Hang Seng is up a whopping 3.02%. And rounding up the numbers, we've got the Kospi, which is up 0.77%. Sea of green, Kelvin, across the region. Tell us why.
Yes, so firstly, it's very likely to that positive spillover effect from the Fed dovish pivot, as we know on last 2 days ago, where the Federal Reserve officials has kind of penciled in more potential interest rate cut coming into the picture in 2024. So that's one positive sign. So another positive sign, most recently is due to what I call the fear of this deflationary risk spiral coming back into the China. So today, this morning, we do have some encouraging China data that I have to share for the audience is the release of retail sales and industrial production. So let me start with industrial production first. So for
Okay.
industrial production out in China, it actually managed to beat forecasts or beat expectation. So they came in at 6.6% year on year, much more than expectation of 5.6%, and also above the previous month of October of 4%, 4.6% year on year gain. So the latest number of November at 6.6% year on year is actually the fastest pace of rise or growth since February 2022. So that is a kind of a much more of a rosy outlook away from the slew of depressing data that was seen in the last couple of weeks out from China. And also on top of that, we're talking about, so that's industrial production. So we know that China itself, they actually top policymaker are pushing for industrialization plan. I would say modernizing industrial production works in China that's focusing more on the high end technology space. But on the retail side, we also do see a bit of a confidence coming back on consumer spending. So retail sales actually surged 10%, 10.1% to be precise year on year in November. So that's actually faster than 7.6% year on year in the previous month, October. Below, yeah, even though it went in below a market expectation of 12.5% year on year, but the actual number, recorded number of 10.1% year on year for November is actually showing the fastest pace of growth since May, and it's also 11 consecutive month of growth as well in terms of retail spending. So with these two sets of positive number, it kind of at the moment in the short term lower down the dial of this deflationary risk spiral that is still prevailing in China due to this chronic weakness in their property market space. So that actually explain that outperformance of the Hang Seng Index that we see so far intraday right now.
Kelvin, I do, however, have to throw a different lens to the data. One of the key things is if you look at year-on-year data, there is a low base effect
Yes,
data from last year because last
yes,
year basically China was still in lockdown. So
yes, precisely.
again, I think investors need to temper their lens in terms of the positive data.
Yes, precisely. So, what Brian you mentioned is due to the basing effect as well. So basing effect over here is we got to be very cautious over here as well because of the lower base last year, and also on top of that, right? Recently, yesterday, the China top policymaker concluded their major economic work plan seminar. So that's actually a discussion. It's a closed door discussion. So it was reported by the local press that priority has really been made on what top policymakers are looking out for in 2024 in terms of economic goal setting. So the first priority economic goal setting is in the industrialization policy that focus on China obtaining cutting edge technology. That means, i.e., we're talking about semiconductor chips. And bear in mind that over here is that at this point in time, next year will be the year of U.S. presidential election, which is due in November 2024.
Yes.
So in a run-up towards 2024 over here, presidential candidates will start to host debate, and one of the key debate will be the relationship with China and US. So given this top priority of China is to obtain cutting-edge semiconductor chips being part of the industrialization plan for 2024, that will actually draw neon conservative US politicians back into the radar again. That means they are actually presidential candidate that is skewed towards this side of the camp may tend to actually champion for more sanction against China to actually neutralize this industrialization policy threat that could be part of this national security agenda in US. So we may see a bit of volatility coming back into the China market with this jawboning by US politician hitting on China, saying that their industrialization policy for 2024 could be a potential threat to US. So that could actually spark another round of, we call it a weakness on the China stock market. And on top of that, do not forget that making China a boost of domestic demand priority for next year has started to fall second spot, right below industrialization policy. So something investors should be keep aware of coming into next year as well.
Now, on a different note, then we've got some data out of Japan. What is your interpretation of those numbers, particularly that manufacturing PMI continues to contract?
Yes, so let's talk about the manufacturing PMI first. So these are flash data released by make it the PMI data compiler. So the manufacturing PMI for Japan contracted 47.7. So that's below 50%, below 50 level. So for sure, it's weakening much further than the previous month of 48.3. So it's close to 7 consecutive months of contraction in manufacturing activity. So that is actually indicating to us a rather lackluster external demand environment. But however, if you look at on contrast, right, you look at the services sector. So the services sector primarily has been given a boost on December. Flash data showing an uptick of growth, 52 level above 50.8 in November, quickest pace of increase since September. So all in all, it seems to me that the Japan's economy itself is not that bad at all, despite the fact that in the last couple of years, the economy is more driven by the services activity rather than manufacturing activity. So all in all, right, it could potentially be putting much pressure on the recent yen strength against the dollar. So the dollar yen continue to remain weak in today's Asia session. Bearish reaction right off the 200-day moving average, which is acting as a key resistance, a near-term resistance right now around 42.30. So that's the dollar versus the yen. So right now it's actually looking to test its current week low right now, which is at the low point of the current week is at 41.40. Yeah, 140.95. Yeah, 140.95 level. So it seems to us that all the attention will be on next week BOJ meeting, which is on the it's a 2-day meeting on Monday and Tuesday. So the outcome will be on the 19th. So very unlikely they will do any changes to their current monetary policy tools, either tweaking their yield curve or most importantly making a shift away from negative short-term interest rate. But bear in mind that there could be a groundwork that being laid out during the press conference of Governor Yuda. So that will be come out during Singapore time around 2 p.m. to 3 p.m. Singapore time. So that's during the close of the Japan hours, okay, the Japan stock market hours. So traders and investors will be looking out for him. Do he really will he sound as hawkish as a week ago, where he actually sounded that BOJ may start to face challenging moments in the early part of next year? And also, what are other things that he is looking out for BOJ to actually start to think about removal of the current negative 0.1% short-term negative interest rate that is in place since 2016. So these are some signs that traders will be looking out for. So if BOJ governors start to sound very confident in terms of Japanese growth, especially on wages increase, that could actually push up services inflation in the next couple of months heading into 2024, that could add further downside pressure on the dollar yen.
On that note, Kelvin, thank you very much for your insights. Thanks for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, Senior Market Analyst at Oanda, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out the show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.